This is a fact I think people should really wake up to. We are in a propaganda war with China. We're in an economic war with China. We're in a technology war with China. And hopefully, I hope we don't get there, military war with China around Taiwan at some point. The country with the best AI is going to win the future of warfare in many ways, propaganda being a big thing. Now, if you put DeepSeek on your phone, it better be a burner. This is my DeepSeek phone. This is my TikTok phone. And this phone thinks I live in Phnom Penh, Cambodia. So I'm taking care of myself. Everybody else should understand what they're doing here. Very risky to put this stuff on your phones.
Wake up. We're already at war. Not with tanks and missiles yet, but in a high-stakes battle for economic, technological, and informational dominance. The biggest player? China. The three wars we are fighting right now are propaganda war, economic war, and technology war. Let's talk about digital security. If you're using apps like TikTok or DeepSeek, you better be aware of what's happening behind the scenes. Your data, habits, and even your thoughts are being collected and analyzed. The country that masters AI first will dominate the next era of warfare, cybersecurity, and economic influence. It's not just about tech, it's about global power.
Yeah, well, I got to call you after the show, Kevin, and figure out how you did that so that I can do it myself. You know, your sentiments about DeepSeek are shared by our Jackie DeAngelis, who used to follow tech stocks for a hedge fund. Here's what she said earlier today.
What they essentially did here was copy technology that was already existing, that we had innovated here in the United States. I want to see how they innovate on their own when AI goes to the next level. You got something new, you got something interesting, put that out and let's see what you can do. You took something existing and you did it cheaper. That's the story of tech. So I don't think it was this huge watershed moment.
China has built its tech empire by reverse engineering, replicating, and mass producing at lower costs. The latest AI tools, including DeepSeek, are no exception. The copy-paste playbook steps include identifying the groundbreaking tech, reverse engineering it, flooding the market, gaining adoption, and pushing competitors out. Sure, China has mastered execution, but true innovation isn't just about copying what exists. It's about creating something the world hasn't seen before. The next phase of AI will require breakthroughs in reasoning, adaptability, and ethical alignment.
In addition, we discovered by running some queries that the information is completely culled, it would seem, by the Chinese government.
It's a propaganda war. I mean, bottom line here, this is the fallout from the TikTok narrative that started a few weeks ago. I mean, we've got to really figure out what the game plan is when we bring apps to the population. We have to decide, because this app itself breaches that act of Congress. If it's scraping data, and if you actually install it, it's going to ask for your email address. In the case of Google Mail, it looks like it's scraping it. So everything you've ever emailed that's sitting on the server domestically is going back to China. That sounds like a breach of the act of Congress. So we're going to get into a bit of a war here, taking these things down if they're breaching the laws that say you can't steal data from American citizens. And the bigger issue, which is going to have to get resolved even on TikTok, is maybe it's time to give data back to users so we don't have all this litigation that's coming from our own country and from other foreign countries and from users and psychologists who care about the mental state of young people. There's a whole lot of stuff that's falling out. And on top of all that, one other derivative, unforeseen consequence, check out that bill that Senator Lindsey Graham's putting out there. He's saying that all of these Chinese companies have a secret golden share that forces them to give data back. And 285 of them are listed on NASDAQ and the New York Stock Exchange. As far as I know, that's illegal. So there's a whole lot of stuff going on here, and it ain't good.
It's not just about TikTok anymore. The latest revelations show that China is using AI-powered apps to manipulate information, harvest American data, and wage a silent propaganda war. This is a direct threat, not just to privacy but to national security and the integrity of our digital infrastructure. Chinese-controlled AI apps are filtering and censoring search results, shaping what users see and believe. If you install some of these apps, they reportedly demand access to your email, contacts, and messages, and that data could be heading straight to China. China's golden share strategy forces companies to hand over data to the government, and now, 285 Chinese firms listed on U.S. stock exchanges may be caught in this web. If we don't take decisive action now, we risk losing control over our own digital ecosystem. The world's next great war won't be fought on battlefields. It will be fought through AI, data, and control of information.
Nvidia's market cap slipping below $3 trillion. Fears over tariffs weighing on shares of the company, among other things. Nvidia has lost 10% of its value so far this year. It's still, though, the country's second most valuable company. Joining us for more on the chipmaker, Sasha Stojic, venture partner at Playground Global, a deep tech venture firm. Sasha spent nearly a decade heading up Nvidia's GPU software division. With a run that we've seen, I mean, historic. I can't even mention anything close to it, Sasha. I guess I could come up with something. But should we be surprised that at some point there's, a stock goes through a spell like this with nothing wrong with the fundamentals?
Yeah, I mean, you said it exactly right. Nothing wrong with the fundamentals. I'm sure you all listened to the earnings call, and it was really nothing but good news. The company is executing as well as it could. If there's anything I knew in my 10 years at Nvidia, I know the team there. It's the world-class team that just delivered yet again 70+% growth in revenue. Yes, it's not 100+%, maybe like the previous quarters or years. But still mind-blowing, and for a $3 trillion company. I just did the quick math in my head as I was listening to you. Nvidia generates $100 million per employee, and that's just great. I mean, in market cap, in revenue, it's about 3.8 million, and the closest I could find is Apple at 2.3 million. So all these metrics are just incredible.
Nvidia's stock is slipping, but let's not hit the panic button just yet. Despite a 10% drop this year, the AI chip powerhouse is still the second most valuable company in the US, and when you look at the fundamentals, there's nothing structurally wrong with the business. Earnings were strong, 70% plus revenue growth is no small feat. The team at Nvidia is world-class. They're executing at an elite level. Sure, tariff fears weigh on investor sentiment, but they don't change the fact that Nvidia dominates AI chip making. Nvidia generates $100 million in market cap per employee, which is a mind-blowing number. Revenue per employee is $3.8 million, which is far ahead of Apple's $2.3 million. Stock market corrections happen even for companies riding historic growth waves. AI is the future, and Nvidia remains at the center of it all. The real question isn't whether Nvidia will recover, it's how much bigger it can still get.
So we know that it in terms of the growth that we've seen, the multiple, while high, is probably not unreasonable. But how much air, is there an air pocket? Is there a disconnect between, the stock price and the underlying earnings per share? How much further could it go down? How much further could it go down, you think, Sasha? People just said, I've made so much money, I'm going to get out.
Okay, I'm not a stock analyst, investment analyst, but what I can say is you can be a trader, you can be an owner in this stock. I am an owner in this stock, obviously. And any dips and spikes, especially short term, are based on sentiment and perception, not necessarily on fundamentals. Yes, there is profit taking. A lot of people made a lot of money in the past few years, so it makes sense to get out. But there is so much upside left. The AI renaissance is just at the beginning, and Nvidia is the driving force behind that renaissance. And we can go through the news and all the announcements about the data centers that are being built. And Nvidia is by far the biggest benefactor, as well as all the other entrants into that space and vendors and suppliers that will spur the economy in that sector.
Nvidia has been on an unstoppable run, but with some recent pullbacks, investors are asking, is this just profit-taking, or is there a real disconnect between stock price and earnings? The AI boom is just getting started, and Nvidia is at the heart of it. Short-term dips are more about sentiment and profit-taking than actual fundamentals. Profit-taking is expected. Early investors have made life-changing money, but long-term holders still see massive upside. AI data centers are expanding at a record pace, and Nvidia is at the center of it all. The demand for AI chips is nowhere near peaking. The AI renaissance is just beginning, and Nvidia remains the undisputed leader in AI acceleration.
So it could go down for a lot of reasons. Do you think the tariff news that we're attributing to some of the weakness yesterday, is that legitimate or an excuse?
Tariffs are an excuse and a concern. But right now it's unclear what those tariffs will be, and the specifics are lacking, hence the uncertainty. Uncertainty leads to probably some people getting out of the stock. But until that's settled, the uncertainty will continue. But I'm also convinced that this administration has the best economic interest of our companies in mind. So I don't think in the long term that will have an impact.
Nvidia's stock has been slipping, and the latest headlines are pointing fingers at tariff concerns. Uncertainty drives volatility, and right now, the specifics of potential tariffs are still unclear. Investors don't like the unknown, so some are taking their gains and stepping aside. But are these tariffs really going to crush Nvidia? Unlikely. Nvidia isn't just another chip maker, it's the backbone of the AI revolution. Even if tariffs create short-term headwinds, the long-term trajectory remains solid. The demand for AI chips is surging, and Nvidia still dominates that space.
Are you surprised that Nvidia has continued to trade so poorly?
On the surface, yes, right? So if you look at it fundamentally, they just reported Q3 2025, right? So they have a different year. So if you just look at the estimates for 2027, the stock's trading around 22 times 2027 numbers. And that's where you have to say the market is saying we don't believe that's going to happen. And you have to respect the market. And I think to Christina's point, if we get 4 to 5 billion of tariffs on our export restrictions on these chips, well, there you go. That they're not going to make that 2027 number. And so right now the stock is still trading in this channel between 110 to 115 to 145-ish. So that channel has not been violated. We want to see that hold. But I think that you do need to respect the market of saying, well, you can say what you want about their numbers in the future. We don't believe those are going to happen. And at the same time, you're just seeing so much carnage in like an AMD, which I think is down 55% over the last year. And so this market has not suffered fools, but I don't think this is the time for you just to ignore what the market's saying. I continue to sell calls on the name. I really like the name long term, but I respect how it's trading right now. And I do want to see it bounce off this, like right around this level. You want to see it bounce and not violate that $100.
Nvidia, once the unstoppable AI powerhouse, has been trading poorly despite strong fundamentals. The big question, is the market just being cautious, or is there real trouble ahead? Q3 2025 earnings were solid, yet the stock is still slipping. Looking at 2027 estimates, Nvidia is trading at 22 times earnings, but the market isn't buying it. Tariff concerns and export restrictions could cut billions from future revenue. Nvidia has been bouncing between $110 to $145, a critical range for investors. If it breaks below $100, that could signal a deeper correction. On the other hand, a strong bounce from here could reaffirm its long-term strength. Short-term uncertainty is shaking the stock, but is this a buying opportunity or a warning sign? Watch that $100 level. If Nvidia holds, it could be ready for a major rebound.
Gotten a correction
in the NASDAQ.
and more in the NASDAQ and, well, in the mega cap names.
Yeah.
I mean, Nvidia is off 21% from its record high of January the 7th. Alphabet's down 18% from its record high of February 4th. Microsoft down 16% from its high last July. Amazon, Meta, and Apple are all down significantly from their own record highs. You made a move too, Kev, in Nvidia today. Tell me more.
Well, yesterday at the close, Scott, we covered a quarter of the position just in case the things got a little bit more dicey today. And there was a lot of premium, as you can imagine, with the volatility. So we wrote a short-term 1 week call. It's a 123 option. We generated almost $5 of premium. So if I get taken out, I'm out at 128, and that would be great. Jim just bought it, and we still have the other 75% of the shares uncovered. But Scott, I'd be a buyer of any of these down here. Maybe not back the truck up and go all in, but if you're dollar cost averaging into positions that you really like, 10 to 20% pullbacks are the times you want to be buying.
The mega cap tech names have taken a big hit, and investors are wondering, is this a chance to buy the dip, or is there more downside coming? The damage so far includes Nvidia, which is down by 21% from its all-time high on January 7th. Alphabet, Google, is down by 18% from its February 4th high. Microsoft is down by 16% from its July high, and Amazon, Meta, and Apple are all significantly off their peaks. This isn't just an Nvidia problem. The entire tech sector is under pressure. Some investors are adjusting their positions, like covering parts of their holdings or writing short-term options to generate premium in this volatile environment. Selling covered calls at higher strike prices like $123 calls on Nvidia allows for potential upside while locking in profits. If you're a long-term investor, 10 to 20% pullbacks in strong companies are often great buying opportunities. Now, if you found this video valuable and you want to diversify your investments beyond traditional stocks and bonds, I have just the thing for you. Even though I believe that investing in a low-cost index fund is the best long-term investment for the average Joe, the benefits of solid physical gold are hard to deny. I think of physical gold as insurance against unpredictable times, and I'm not the only one. In 2023, central banks added over 1,000 tons of gold to their reserves, the second highest annual purchase in American history. And in 2024, central bank got another 290 tons of gold in just the first 3 months of the year. If the biggest banks in the world are buying tons of gold, I'm sure there's a good reason for it. I found a company that allows ordinary Americans to own and securely store physical bars of gold as part of their IRA account. The best part is that they're giving away a free guide to teach you all about investing in solid physical gold. If you want to learn more about how gold can protect your retirement savings, just click the link in the description to receive a completely free gold IRA guide. Now, if you're tired of these so-called stock market experts blabbing about the same picks over and over again, I've got good news. I found an investing newsletter that completely blows the competition out of the water. They find highly asymmetric stocks with low risk and high reward, the kind you'll never hear about on CNBC or other major stock market news sites. I'm talking about companies like Ukrainian agri-producers during a war or Bank Handlowy in Poland, a solid bank trading at insanely low valuations. These companies aren't flashy. Many of them produce boring products or provide services in oil and gas, banking, and agriculture. But here's the thing, they make money. And by investing in stocks like these, you can too. For a limited time, they're offering a 30-day trial for just $1. But as a thank you for watching this video to the end, I can do even better. Click the link in the description and tell me your best email address so I can send you their recent newsletter for free. It comes with 5 stock recommendations as well as high-quality market analysis, so make sure you check it out. You've literally got nothing to lose.